Yes.
borrow some money somewhere else,
Huh.
probably need some demand. So basically they're not taking money from India. It meets the restriction.
It's allowed. It's allowed.
Still, being an Indian constitutive bank,
Huh.
is still exposing itself to the international market.
That's the point I'm saying. That's the loophole in the system. You are exposing yourself to a foreign exchange loan to that extent. But here, one second. Here RBI will keep guarding that it should not exceed your entire net worth. That guard will be always be there. ECB, it is an external commercial borrowing. That guard will be always there from RBI's account. Okay, but the fact remains that they are not allowing you to do fund based. They want you to do fee based. Yeah, sure.
What about their credit rating part? Because they'll have the control.
It will fall.
Yeah,
If they take too much of debt on their books, it will fall. It will clearly fall. Haji.
You were mentioning that CDS is tradable.
Ha.
In what format? It's a paper. Now, say Lehman Brothers or anybody else wants to buy it.
Ha.
But what would they pay to ICICI?
What it is, what they'll pay the premium difference. They'll pay the premium difference. I'm coming to it. Just one sec. Now that trading part, I'll come to it. Anything else on the basic structure? What happened now is, moment you had a credit derivative floating in the market, okay, what really happened, I'd like to finish this, take a break and then I'll give a noting. I'm just through, right? There was a credit squeeze. Please understand, nothing related to Tatas, nothing related to Chorus. Entire premiums went up. Moment entire premiums went up, here it is. ICICI was forced to do mark to market. Now please understand there's a difference here, right, in this context, okay. Please understand, when they had to do mark to market, they provided for, right, additional amounts. Moment they provided for additional amounts, their profits came down. This is exactly what the market came to know. And that's exactly where they started saying, you see, the markets were operating a lot of fear factor. You see, that subprime was lurking on everybody's background. Immediately they realized, oh my God, we had this doubt that ICICI has had exposure and now it is dead, finished. This is where you need to realize as an analyst, it's a credit derivative. Yes, I agree there's a credit squeeze, but please underline, this loss is a notional loss. You should be extremely careful as a financial management student, right? Notional losses, my friends, if you're going to run businesses, you are going to have these two terms. Is it actual losses? Then you are dead. Is it notional losses? Right? What is a notional loss? Right? It's a loss on account of the market conditions. But moment, please understand, Ms. Kocha is saying the same thing. You see, where is this loan gone bad? We are just providing for it. Moment there is normalcy restored in the market, we will write back that amount. Yes, it will be a source of worry where this notional loss becomes actual losses. In this case, Tatas are where they are going on stream. Nay, this is just the crystallization, Alamgir, my friend, will happen when there is an actual default. अभी खाली एक प्रोविजन रख रहे हैं, हाँ, उनका प्रॉफिट्स नीचे जाएगा to the amount, हाँ, it will have to go down. हाँ, no, you see, one sec, let me explain. 100, my profit is, I need to rub this off. My profit today is 100. My profit today is 100. Please understand that this instrument is what you need to understand. My profit is 100. Mark to market loss is 20. Reported profits 80. Okay? This is because the market has moved against me. And next accounting year, next quarter, market goes up. This provision which was made will be added back again. Khatam. Right? Yes. Next financial year, ma'am, provided markets move back. Provided markets move back. Friends, you have to realize two things. As financial management students. One, is it actual losses? If yes, we are in a spot of bother. Yes, sir.
This if the starter
Huh.
company is doing exceedingly well, and but the default rates are high.
Very good question. No, you'll have to go as per market. It is mark to market, right? And unfortunately, in the market, the prices are not,
You are making a profit. You are still showing a profit.
because the market is put it to that extent. So the rule is, right, you'll have to take a conservative value of accounting. So Tata's may be doing exceedingly well, but the markets have beaten it down, right? Premiums have gone up. I'll have to make a provision for that. This is exactly the statement that she's trying to make, that it is not actual. Now please understand the difference, my friend. Speculation mark to market and investment mark to market. Speculation is actuals. In investment, it is notional. I hope, right, I'm sorry, I was looking at Alamgir when I made that comment. I need to repeat this. If there is a provision, you are writing down your profits. Tomorrow the market goes up. You will again write back the provision, because that is not actual losses, it is notional losses. Please make your final notings for this session. In case of an investment mark to market, in case of an investment mark to market, we normally provide for auditors, companies, right, provide for notional losses. This is based on the conservative method of accounting. However, these losses are not actual losses. And the amounts would be written off only when they crystallize. Just one last line, In all other cases, when market conditions improve, these amounts would be added back. One sec. Can I take the questions after the break? I'll take a small break. I'll relieve these colleagues, I know. And then I'll start with these questions.